On today's podcast, we have Gorm Thomassen. Gorm is the CIO of AKO Capital, one of the world's leading investment funds, managing around $22 billion in capital. AKO were founded in 2005 by Nikolai Tongen, who now manages the Norwegian Sovereign Wealth Fund with $1.3 trillion in its coffers. It's the largest fund on the planet, owning approximately 1.8% of the world's stocks. Now, for me, AKO are the All Blacks of London's hedge funds. I've been privileged to see behind the scenes at AKO, and they are truly one of those rare organizations that practice what they preach and have profound methodology behind the results they produce that we'll explore during this conversation. As someone who's a partner in a fundamental investing fund, this was a particularly meaningful conversation for me. In this episode, we're going to talk about how Gorm and his team handle $100 million plus P&L swings, some philosophy, and the powerful role humility plays in building elite performance. I hope you enjoy. Gorm Thomassen, welcome to the Accelerating Excellence podcast.
Thank you, sir.
So I'm desperate to know the first moment the prospect of pursuing a career as an investor entered your mind.
So that's an interesting question because I was one of those kids that never really knew what I wanted to be. And knowing that I have a kind of unhealthy level competitive instinct, I thought that finance was a good sort of revenge of the nerds where I could go and be opinionated about something and know instantly whether I'm right or wrong. And it's a fantastic place to learn. And that's really how I kind of came to finance in a kind of indirect way, really.
Okay, that's brilliant. It's almost like the mental sport, as it were, I guess.
Absolutely.
Was there a specific character, whether it was on was it the Wall Street sort of movie or a book you'd read or a family member perhaps that you'd sort of thought, oh, I like the look of?
No, it was just a really kind of pathetic, overdeveloped competitive instinct. And that when you talk to people that good grades at school, they said, oh, maybe you could get into this university and then maybe you can work in finance. And same thing, at university, people said, oh, wouldn't it be cool to work for Goldman Sachs? That would just be amazing. And, they have the best trading program and you get to go to New York and that sort of chat that got me intrigued. So I just, want to stress how lucky I've been, and you kind of talk about how clever you've been in planning your career and everything. But there's a huge amount of luck in here. So, I just like to get that caveat in on everything I say about my abilities and the degree of success I've had.
And you're from Norway.
That's right.
It's not particularly the stereotypical finance hub of the world. But were there any people in that environment there that sort of prompted you, or peers that?
If anything, my parents thought that I'd enjoy going out into the bigger world and inspired me to go abroad, spend a bit of time at school in the States. And I just sort of wanted to go out and explore, see what's there, and compete against the people regionally, and then you want to compete nationally, and then you want to compete internationally, I guess.
Absolutely. And in terms of academia, so you sort of had this interest, then obviously academically you went on to study the subject. How was your studies for you? And there was obviously that spark there. Did studying the subject in those academic environments turn that into more of a flame?
No, I mean, my academic background's pretty broad. So I did this army intelligence thing in Norway, which is pretty much the only elitist thing we do in Norway. And again, that's, competing against the smartest people in the country to get into this thing. And then, you do a bit of Russian language and some military stuff. And then I read a bit of Russian history at university. Then I went to London. I did a bit of economics. And like I said earlier, I didn't know I was going to go into finance, but in retrospect, I think I've been lucky in that having a broad education is crucial for sparking a bit of creativity in what you do. If you only come from one narrow field, it's really hard to be creative because you can't really draw any inspiration from outside of your narrow field. So I think with hindsight, I've been lucky in having a broader than normal education.
Yeah. And within finance, I think it's fair to say there's you see that competitive nature is really coming through, and finance for sure is competitive. But there's also lots of avenues you can potentially apply that competitive nature. For instance, you got one end of the spectrum, you got that, I guess, the day trading side of things, where maybe making lots of decisions all day long. And then you've got at the other end, perhaps the fundamental investing side of things, more cerebral, perhaps more of a poker game than a gunslinging fight, where who can just throw the most rounds down. Was there any point in time where you considered, I mean, how did you zero on to the area of investing that you went on to excel in?
That's a very good description of the financial markets you just gave there, and just knowing myself, I'm clearly better suited at the more longer term chess game type of situation. More revenge of the nerds than kind of really quick thinking on your feet environment would suit me much better to be in that long term bucket.
Absolutely. And would you mind describing in a very succinct way that I guess the style of investing you take to some of the listeners that perhaps don't have a finance background?
So first of all, finance is a bit kind of baffling because you come in and there are a lot of people who do a lot of strange things, and sadly, the results are not very good for investors in general. So, for our parents' pension money, that hasn't been a success because people, like I said, just do a lot of strange things. One of the biggest problems in the market is that the stock market has become increasingly short term. So, if you go back to the 80s, people would hold stocks for maybe 7, 8 years. If you look at the American stock market today, you have half of the trading volume coming from options, and within that, half of those options expire on the day, which you can't really get more short term than that. So that's a big problem, and really, our fundamental insight at AKO is a really simple one. It's if you're long term and short term, well, you can beat the market, and if anyone's interested in the stock market, I think the key insight really is going back to Ben Graham when he said the stock market is a voting machine in the short term and a weighing machine in the long term. So in the short term, it's all about are stocks hot or not, popular or not, and their valuations. They go up and down every day, every second. Whereas in the long run, it's all about, are you actually invested in a good company? And if that company does well, it compounds earnings over time, that's a wonderful thing. And you'll easily beat the market. But that means you have to be in that investment for at least a couple of years. And the majority of the market is not. So they miss out on that. It really is as simple as that.
Fantastic. And I want to just rewind back to your time with the Norwegian military. It's fascinating. It's something we don't have in the UK in terms of national service. But how do you think, looking back with a little bit of hindsight bias, that set you up for the success you've clearly gone on to have? Do you think there were experiences there that perhaps gave you an edge that I can imagine some of your peers, perhaps at an LSE, perhaps might not have experienced?
First of all, just doing something completely different. It's really helpful because you take that experience with you, and like I said earlier, that sparks a bit of creativity because there's always something you can take with you into your new situation. I think spending time in a completely different type of organization, which is a dictatorship essentially, just shows you in which situations dictatorship is better than democracy from an organizational point of view. You learn a lot about yourself in terms of pushing yourself, and you see how wonderful it can be to go through some difficult times with people, how it really gels you together as a group. Um, and so I think if I ran the country, I'd definitely have national service. I think
Oh,
it's a
me too.
stupid thing, just throws people from different walks of life into to the same room as a group, and you discover you have more in common than you have, the difference. So no, I think it was a great experience. Tough times sometimes when you were there, but I'm really happy I did.
I can imagine. And I guess those tough times are synonymous with life itself, and can give you some prep for that as well. And when they inevitably hit, specifically in the military, your role was within the intelligence side of things.
So this was back in the day. I mean, it sounds horribly familiar now, but this was back with the Soviet Union. So the idea was that in the horrible event that the Soviet Union would attack Norway, we would perhaps capture some soldiers, and then you need to interview these people, and you try to figure out based on that interview and whatever other intelligence, yeah, build a picture of what's going on the battlefield. So what we did was a combo of learning Russian from scratch and quite a bit about military intelligence in general.
Fascinating stuff. Moving on from that, your early experience in finance. Can you talk us through some of that?
I started as a broker in London, and it is a baffling environment because people do a lot of things that, like I said, just don't seem to give a very good end result. But they're very well rewarded for it. It takes a few years to sort of find your way through that jungle. And you start out quite respectful, and you think that, well, these people have done it for a long time, so they must be doing it the right way. But then gradually it dawns on you that, as a broker, your incentives are in fact totally opposite to the best interest of your clients. So back to what I said earlier, if you want to be a successful investor, I very much think you have to be long term. If you want to be a successful broker, on the other hand, you have to be very short term. It's all about, getting your name out there, having some great stories, making your clients trade a lot because then you generate a lot of commission for your bank. And, it's like a popularity contest. And then if you're really popular, you get voted the best broker that year. Typically, the best broker that year, I noticed, we're not the guys who made their clients a lot of money, but made their bank a lot of money and kind of got their names up in lights. And then you move on to your next gig at another bank where you pay more, and the average career is like 3-4 years or something, so very short term. And so this was a really good insight when we started AKO, because both my partner and I had spent time on the sell side as a broker, and we knew that the incentives are completely screwed up. So the first thing we do is like, okay, let's not use the brokers at all. And that obviously leaves you with the question, okay, if you want to use brokers for help to lean on, then you have to do whatever due diligence you have to do it yourself. And then we went back to the kind of intelligence service routes and thought, okay, what are the best ways of finding out things, triangulating information. And so both of those experiences were extremely helpful in setting up AKO, having spent time in the intelligence service and then been in the kind of engine room of the financial market, which is an investment bank, and seen how things work on that side.
That's very interesting. And at what point did you sort of think, right, it's time to make this transition from this environment I'm in the broking side of things towards, I guess, where you are now?
So you kind of always want to do it because there's a huge difference between, pulling the trigger and advising other people to pull the trigger.
Was that always a strong desire for you to be taking risk, to be at sort of the teeth end of the...
Absolutely, because otherwise, how can you prove really, consistently whether you're right or wrong? So this comes back to being an opinionated idiot and, wanting to test if your opinion is right or wrong. And you can't do that being a broker. You can, but it's much, much easier if you have a clean track record of buying and selling things, and it's there for everyone to see what you've done and whether it's any good or not.
Absolutely. That meritocracy is what I absolutely love about trading and investing from a performance standpoint. It really is black and white where you are, especially...
It drives me around the bend when you're having conversations and there is no right or wrong answer, and it's extremely frustrating. And here it's very black and white, very good.
And so you've obviously gone on to set up AKO with your partner Nikolai Tongen, and it's obvious you guys are a tier one at what you do, world leading. When was that? What were the seeds of AKO? At what point did the idea enter your mind and think, hey, we can build something here? And did you even have any idea of the success that you'd end up having?
We started out in 2005 and then had a great, big, ugly financial crisis. And we got through that, like we've done with everything in AKO, through a combination of luck and skill. I remember very well, we had an offsite during the financial crisis, and we thought either we have to retrade as plumbers and electricians, and the whole financial system is going to come crashing down, or this could be an amazing opportunity going out, blank piece of paper. You can buy whatever you like because everything is cheap. And so we thought, well, let's be a bit optimistic and let's do the latter. So we just like thought, okay, what are the best companies in Europe? We started buying those. And then the more we thought about it, with the help of some people over the years, we realized that quality is probably the best way to go about investing, and holding high quality companies for the long term is now what AKO is all about. But we again got there through a combination of luck, skill, and quite a lot of introspection.
And there must have been some belief there as well, because it is no secret. I think Elon Musk talked about this as well, how he actually describes it as kind of a problem that the top individuals in the academic systems at Ivy League or Oxbridge in the UK, generally they tend to move into the finance space. It's got some of the world's greatest talent, who all then maybe move into the investment banks, who all then want to be at the teeth end where you are now. They want to be working at an AKO, and obviously that creates this incredibly competitive environment. So to outperform and be at the top percent of that industry, what do you think has been the causal mechanism behind that success?
I mean, I can talk about the process here, and I can talk a little bit about what I think personally has contributed and how the two kind of fit together. So, first of all, it's the insight that we derive literally from the whole Ben Graham thing, that we want to work with the not the voting machine, which is the popularity contest, because nobody can guess what's going to be popular any particular week or month or season or even year in the stock market. And then we want to work with the weighing machine, which is where we think we can add value. We think we can do some research and say that, this is a good industry and this is the best company within a good industry. Like I said, hold high quality companies for the long term. Then you need to think about, okay, what does that look like in practice? We think you have to be very, very stringent about separating the process, which is what you do on a day-to-day basis here in the office, and the outcome, which is, how good is an investment. And this is particularly important with what we do, because the lags can be phenomenally long. You make an investment decision, it could be 3 years until you know whether you're right or wrong. And in the meantime, the market will tell you maybe every single day for a year that you are a complete idiot and that you are completely wrong. Having that mantra of process versus outcome, where process is the stuff you can control, the outcome has a huge input from Lady Luck, and you can be really unlucky, and that's always going to happen in our industry particularly. If you get 55% right and 45% wrong, you're a complete genius, which means you're getting 45% wrong, which is quite a lot of getting stuff wrong. And the way to stay sane in that environment and not get kind of completely rattled by bad outcomes is to focus on the process. Know that if you do that, yes, you'll have some bad luck, but on average, you'll have a mix of good and bad, and it'll be a good outcome in the long run. So for us, like, a good parallel is sailing. You can rig your boat and you can train with your crew and whatever, but then some kind of, weird current turns you the wrong way around, or a competitor drives into an orc, eats your rudder or whatever. So, there's always all that complete luck element which you can't control. I think those are the kind of key insights AKO. And then if I think about it from a personal point of view, by nature being patient, because you need to sort of sit there and accept that the market tells you you're wrong every day, every week for a year, and be okay with that and not start to get impatient and do stupid things because you haven't had the patience to see whether you're right or wrong with your initial investment decision. So being patient is good. And if you want to be impatient, you can be impatient on the process. You could shout at everybody to dot the I's, cross the T's, do the process right, but, be patient about the outcome and impatient about the process. So that's one thing. I think the second thing is you need to be a bit of a kind of jack of all trades, as opposed to an expert in one thing. So, again, for a kind of metaphor would be the fox and the hedgehog. Fox is quite adaptive. He can do a lot of different things, whereas the hedgehog has one trick, which is pins out. The devil's always in the detail. Each situation is different, and you need to have a wide tool set to approach different problems. So I guess those two things for me are more kind of the just lucky traits I happen to have. Then there's the really interesting thing, I think, which is where everybody can train and get better. And this is introspection, because I think only by introspection have we, got to where we are at AKO, always thinking about what we do and evaluate constantly. I think fundamentally, you just sort of need to go back to the basics and have some kind of belief system which just underpins how you think and why you should introspect. And so for me, there's some really, really important inputs in my life. And so this goes all the way back to kind of good old Socrates, who just always said, look, we don't actually know anything, and nobody has a monopoly on the truth. But if you talk to other people, and in particular, if you listen to other people, you will get a little bit closer to the truth. And I think that is just like such a fundamental insight. It just explains why you do introspection. He also said, you have to be humble about this thing. He said something like, we're all idiots. I'm the biggest idiot of them all. But difference is, I know it. And that I love for introspection. Just, that as your starting point, I think is fabulous. And for me, when we hire people, that's like a key thing. You need someone who's humble, who's willing to talk to other people and learn in a kind of teamwork setting. Building on from that, the next thing for me, which really, really struck home in terms of why you should introspect and how to do it, is David Hume, who said, contrary to popular belief, we make all decisions with our heart, and then our brain is not making decisions. That's not, you may think so, but the brain is basically like your PR department that will rationalize why you made a snap judgment with your heart about whatever it is. And you go on and you kind of explain it to yourself and others why you've done it, but that's not the causality at all. And then, one of the books which we gave to all our clients here for Christmas one year, which I think is one of the kind of fundamental books about, investing in cognitive behaviors, is Kahneman, the Thinking Fast and Slow, because he builds on the Hume insight. He says, yes, we have this kind of decision making with the heart, and he calls it system one thinking. So it's kind of the monkey brain, automatic heuristics, make decisions like that. Then, as humans, we have this alternative we can flick to, which is the system two, where you sit down and you think carefully, more objectively, slowly about something. And his book is called Thinking Fast and Slow. And the book goes on about how you should think about, when you use flee kind of reflex, and when you should engage the kind of more careful, slow system two thinking. I think that's just such a sort of super crucial insight in that, how useful is the monkey brain for me in investing, fight or flee? Probably not at all, really. It's completely irrelevant, because the financial market is a kind of human construct which has nothing to do with the evolutionary environment our brain has kind of been developing in for the last hundreds of thousands of years. So it's pretty useless. And then Coleman opens this kind of super interesting area for exploring is like how bad our monkey brain heuristics are for doing most things in finance. I actually wrote down this just for an illustration. I thought it was quite funny. So there are, just looking at biases we have. So this is where our brain goes wrong. There's five really important ones just on the letter A. So I'll just rattle them off quickly. But there's ambiguity bias, which means we don't like to learn new stuff, so we like to decide basing on stuff we know. We all know anchoring. That's a really powerful bias. Someone tells you a number, you just like guess a number close to that number for no other reason than the other person said a number. Then there's one which has a really funky name, apophenia, which is where you see patterns that are just kind of made up by your brain. You see, faces in the clouds, you see signs from God, and then you trade on those signs from God, and that is usually a really bad trade because you're just making up a story in your head, but we're really prone to do that. And then there's, the availability bias, which basically says, we don't actually like to learn new things, so we just make a decision on what we know already. And I think that's a really good one in finance in particular, because this is why companies go bust. Even like good companies go bust because they plan for everything they think, but then they forget about the fact that inevitably there will be new things happening from between now and the end of your budget period. And so, there's an unexpected problem, and then they go bust because they haven't budgeted for the unknown. They only budgeted for the stuff they know about. And anybody can tell you if you ask him, like, did anything unexpected happen in your life in the last, year or two? Of course it does. It happens all the time. And my mum tells me, apparently my great granddad, he was an accountant. And he, obviously being an accountant, he was very careful about kind of budgeting and this and that. So he budgeted perfectly for all the stuff. And he went bust because there were unexpected expenses, right? And so I think this is such a fascinating arena just to kind of explore our biases, put down systems that will combat the biases, correct for them, and that's kind of what we spend our time essentially doing day in day and out at AKO to put in place systems to keep this monkey brain from making too many mistakes for us.
That's incredibly insightful. And I think this is one of the things that I think the mindset in investing has so much value in terms of transferring to just the average Joe or, a graduate deciding what they're going to have next, the next step in their career, or, the professional who's considering a career change, or just anyone making any decision in life, because in effect, your success is judged by the quality of the decisions you make, right? Whether you're a Gorm Thomassen or hey, anyone. And I think some of the principles that you've used and leveraged that you've just talked through there with us can be leveraged by everyone to improve the quality of the decisions they make in their own life, to increase the probability of the success that they encounter. And I think that, in effect, I guess what you're doing is there's this inherently complex body of information that you need to distill down and then eliminate all those biases that might impede the way you distill the information to be able to make a good decision, or 55-45 in terms of...
No, you're absolutely right. And I think introspection is just so helpful because, we live in this sort of weird world where there's theory and then there's practice, and then there's this huge challenge in changing your own behavior, let alone other people's behavior. But, unless you engage in some introspection to begin with, you never even start on that journey. So I think it's kind of the key to unlock better decision making, no matter what you do.
And how have you found that transition to being sort of the superstar investor to then, I guess, as AKO's developed to become this behemoth, the team obviously increases. Now it's not just about you, it's about the team and extracting potential from them. How have you found that? Is that something you've enjoyed? And is there any big learnings there that you could share?
I've really enjoyed that. I think part of the reason why we're talking here really is I read your book and it's just like a happy coincidence that we just discovered that we're really good at a lot of things, but we're really bad at identifying talent, hiring people, and developing talent. And so it's been really inspiring for us to think
That's
more
kind.
carefully about that now that we're bigger and we kind of hire more people, and we need to be more structured around that. And so that's a really good process. But I think in terms of the organizational structure, we did spend enough time to plan so that we have been able to execute one of the very few successful generational transitions in the hedge fund world, because quite often hedge funds are or like one really or two really clever people. The process is a bit black box in their brain, and it's not particularly well documented or indeed imprinted on the rest of the organization. And I think, like I said, trying to fight all these prejudice and make these different processes and get everyone's input into that. That gets a lot of buy-in from the organization, and so we started out being more kind of top down in how we developed and experimented, and now it is still some top down. Like the recruitment thing is a bit more top down now, but we also have a lot of bottom up ideas coming through the organization, people who throw up ideas which we'll run with and we'll experiment, and we document if it works, we'll invest behind it if it doesn't. And being very transparent about it, even if we kill off a project that someone has launched, at least people feel that they've been heard, and I think that is really important. So yeah, foster transparency, dialogue, and obviously then hire the right people who like dialogue better than monologue, and quite humble by nature and keen to learn. That's worked pretty well for us.
And how would you describe that AKO performer, the people that have enabled you to see achieve that incredibly rare accomplishment that you just the generational shift, and it's something so rare to do in any performance environment, to sustain success at that level beyond, say, the core team or the core individual. But what would you say differentiates the average performer at AKO from perhaps the average performer at the average fund that has nowhere near the level of success you have in terms of the traits?
So I think we are a little bit more modern in a few ways. That, for instance, we don't particularly look for that extraordinary maverick guy with his black box process in his head who can just read the market. That type of old school stuff we don't hire for. We have also been quite introspective about what we think analysts are good at and what we think other people maybe are better at, which means that we have disaggregated the role of an analyst at AKO. So very quickly, we think, for instance, that channel checking is much better done by a professional market research team who can make 15,000 calls in 20 different languages than one guy who'll make a call in 15, 20 different places and be completely biased about the
And
outcome.
that's something very novel that you do, right?
Yeah, he's invested his or her ego in making an investment recommendation. Then you make channel checks. You just you hear what you want to hear, and everything will sound really positive to you. Whereas if we do something arm's length with a market research team, that is much more unbiased information. Ditto with accounting. So I'm not saying our analysts are not good at accounting, but there are some people who absolutely love accounting. And me personally, accounting was my worst subject at university. So I'm okay, but we've got people who are like absolute black belt accountants, and all they do is accounting, and of course they're going to be better. And again, I get an unbiased view on the accounts of the companies instead of my analyst telling me that the accounts are fine, because he or she is totally biased on that company and they believe the management and they don't think anything's wrong. And we get some accountants, and occasionally the accountants will raise their hand and say, like, we think these accounts are not very good. And that's an unbiased view on the accounts from someone who's much better. Behavior, I mean, this is going way back to the whole intelligence service. We employ people who are, linguists, psychologists, who give us an idea about whether a management team is being as the saying goes, telling the truth, the whole truth, or nothing but the truth. And again, these people are better on average at reading behavior. They're unbiased because they don't particularly care for a long or short company. They're not that interested sometimes in finance at all, which is great because they just look at behavior. And so so we tell the analysts, look, back to the humility thing. I think, you guys are good at this, but you're not so good at that. And here you need to cooperate with other people who are better, and please listen to them and use that in your analysis. So that's a very modern thing. I don't think a lot of people do this in terms of their research process. But that means you need to hire for that. You need to hire people who are willing to be very open, to learn, to listen to people who are better at them at different aspects of their job, and work as a team, and be humble, and all that good stuff. So that's what we look for.
Sorry to interrupt the podcast, but before we dive deeper into the conversation, I want to express how grateful I am that you're voluntarily choosing to spend your time here with us. I also want to take a moment to ask for your support. I want to bring you the best podcast I can in terms of guests, engaging discussions, and thought-provoking conversations every week. And that's where you come in. By hitting that like button and subscribing to the podcast, you play a vital role. Simply put, when you hit that like button or subscribe, you enable the podcast to reach a much wider audience. And the wider the audience, the easier it is for guests within my network to convince their agents, management teams to free up their diary and come on the show. Thank you in advance for your likes and subscriptions. Now, let's get back to business. Now, a question I have to ask is, and this is because in the last few weeks, I've probably bumped into at least 3 people who've talked about how they're either graduates or experienced professionals from other areas, and there's thousands out there that would cut their right leg off to work at a company like AKO. What would your advice be to someone who is genuinely, sincerely obsessed with investing and would like to be at a tier 1 organization like yourself?
I would say that probably the best thing you can do is to not rush your entry into investing, because you will be a better investor if you have a broad education by methodology, culture, by academic field, have some real life experience, go out to work in hospitality, deal with real people in real situations, and not just sort of race through academia and enter into the investment world with this kind of completely theoretical, conceptual idea about how the world works, because that's not so good. And also, if you take your time, you're probably more likely to have some setbacks, and please do experiment, because these setbacks are really invaluable. You learn a lot about yourself. You learn how to bounce back, and on the flip side, that you see people who come through and they're kind of straight A students, and they control the outcomes, because you kind of can control the outcome at school or university, and you go on to be an investor. Like I said, we have, maybe if we're lucky, 55% right, 45% wrong. And some poor analyst comes in and their first couple of things go wrong, maybe because of something they've done, or maybe not, because maybe they're unlucky, right? And they never recover, because this is the first setback they've had in their life. It's just such a shock to the system not to get an A star. And as Nikolai says, the magic happens outside your comfort zone.
Excellent advice. I want to pivot now to talk to you about what I describe as a peak experience, or like a blue head moment. I wondered if there's a moment, whether it was, I don't know, a split 30 seconds or a period of time, perhaps a few month period or a year even, that you would summarize as almost like the peak you've had so far from an emotional standpoint, in that you were just head over heels in love with that moment and what you guys were doing as a team.
I kind of struggle a little bit with that one, because our job is more like a marathon than a sprint. So there
Sure,
aren't
of course.
but I mean, maybe the best way to describe it, I don't know. I mean, stop me if you think this is nonsense, but like, we make very few decisions. So it's not like we go around and win the zone and we kind of have a hot hand and we make 50 decisions in a week. We make like a handful of important decisions a year, and so I strongly believe the fewer decisions you make, the better they are. But that just means that you have to do a lot of process. And as I call it, you kiss a lot of frogs. You'll see a lot of companies you don't invest in. And so for me, maybe the magic happens when you've had a great discussion with a company or you've done some really cool piece of research, you gain this insight and you're saying, hey, actually, I think I know something and I've had this really good insight and I think, this is a great situation. I think we can add some value. We should make an investment. And sometimes you get so excited you kind of want to put on an order under the table in the meeting room because this is just really, really, really good, and you get very excited. And so that kind of excitement happens from time to time, particularly if the rest of the world thinks you're a complete idiot. Then it's really exciting. And so one of our best stocks this year, people thought we were complete idiots. And all our clients last year asked us, well, why on earth did you hold this stock? And we said blah blah blah. We think this and that and the other. And it was just super cool when that kind of works out and you're dedicated. And so that's so I don't know if kissing frogs is kind of really what you're looking for.
That's brilliant. Absolutely brilliant. Well, let's flip it on the head. Maybe this one will be easier. Has there been a time where you've had that almost peak trough or peak drawdown, or what I'd describe as a redhead moment where you're like, whoa, okay.
Oh yeah, geez. I mean, like back to making 45% bad decisions, and back to the stock market, which tells you you're an idiot all the time. And we've been through financial crisis, we've been through COVID, so we have plenty of bad days, and we've made every investment mistake in the book. So we can easily write the big book of mistakes. So that's not a problem. I got millions of things there, so whatever you want to know.
Is there one that stands out that was particularly challenging?
Absolutely. One really bad one, early days, we invested in a company which turned out to have cooked their books. And that's really frustrating because you kind of lean on some numbers which then turn out to be completely fraudulent. And, we lost more than 90%. And it was just going on for months and months. It was a horrible feeling. It's a good motivator because I can easily, more than 10 years later, recall that horrible, sick feeling in the pit of your stomach. And kind of motivate myself to turn over every stone and minimize the risk that you go through some kind of horrible stuff like that again. And this is part of the reason why we invest in all these accountants, the accounting black belts, because we like to think that we're probably more better prepared to spot a mistake like that now than we were back then. And this is really important, like Nietzsche's right, whatever doesn't kill you makes you better. So if you have that mentality and you try to learn from your mistakes, then it's a good thing. And the good thing about us is that we make a ton of mistakes all the time. So hopefully we should kind of accelerate our learnings in the world in which we operate, which is good.
And so obviously, I guess there's some advice in that answer. But I mean, is there anything else that you'd advise people that perhaps going through moments like that, whether that's now or recently, and they're perhaps in that moment where they're feeling that feeling you described there at the pit of your stomach, you can sort of still feel to an extent when you think about that moment. I mean, what advice do you give to people when they're in that moment in order to maximize their ability to extract the learnings from it so they can actually emerge stronger from it than they went in, like you guys have for decades?
I don't know if there's much you can do when you're in the moment. So I think the only thing you can do is on a kind of nice sunny day when you're not in that moment, you could think a bit about life in general. And I mean, I don't know if you read these stupid Jack Reacher books, Lee Child, but he keeps saying hope for the best, prepare for the worst. Yeah. And I don't necessarily agree with that because there's a much better book, in fact, by a guy who survived the worst of these gulag camps, and he had some survival tips because he, as opposed to Jack Reacher, had been through some real stuff. And he said, among other things, don't ask for anything and don't expect anything. And I think that's much better because I think you know, you should just like, be cognizant that there will be bad and good things, and don't go around and hope for a lot of stuff, because then you're just going to be disappointed. And just prepare for the bad times during the good times. So, like here, we sat down the team after 3 or 4 good years, and we told them, look, we've through a combination of luck and skill had 3 or 4 really good years. We will have a bad year. And then we ran the team through our experience in 2013 when we had a bad year, because half of the team, present team, wasn't here in 13. And we told them how bad we felt. We went through the mistakes we made and what we should do different next time this happens. And having told people that, there will be a bad time, and let's not repeat the mistakes, and maybe see if we can, let's turn it into a challenge. Next downturn, we're going to do better than 13. And that was incredibly helpful, because then you sort of revert a little bit to, oh yeah, this is a bit expected, and this is a challenge to see if I can handle this problem better than what I did last time, as opposed to being, sitting there very hopeful and being caught completely unawares, and start to do stupid things.
Brilliant. In any of those moments, or even the one you just described there, did giving up ever cross your mind?
No, I don't think so, if I'm being honest. I mean, I don't think giving up is a bad thing, but I mean, you should again, I think, sorry for being boring about this point of introspection, but like you should have some sort of framework around it, and just think like, when is it right to give up? When is it just not worth it?
So can you talk to us about that? Like, when is it time to? That's one of the things I love about investing as well, because say there's those questions you have to answer. So what are we going to do? What do we decide to buy? And then there's that, when and how much do we decide to buy? And but then the side of that is, well, when do we decide to sell? When is it time to sometimes sort of stop out of a stock? And the stock, I guess, in this instance this is what I love about investing again, and the value, the transfer I think it has to every profession, is that there is always time when it comes to decision making to stop out of a stock or a relationship or a career path or a habit. And how do you make those decisions?
I mean, in fact, some of the decisions we're most proud of here is when we've lost money, we've admitted to making a mistake. We sell the position, having lost whatever it is, 20, 30%, and the stock continues down, because that is much harder than a lot of other decisions. It's quite easy to buy something, and it's really hard to know when to sell. So again, you need to build a framework around, when is a potential problem just a cough, and when is it actually cancer? And so, given we're long-term investors, we have a fairly high barrier for saying something is a mistake and we should sell. But over the years, we've collected data on our decision-making process, and we know, for instance, that there are no good explanations for why companies start to go aggressive on their accounting. So, if the accounting team tells us that this is not looking so good, then routinely we'll sell it, because we'll rather have a portfolio of stocks that don't feel they have to massage the numbers than having companies that do feel the need to make things look a little bit better than maybe they are. Then the other thing, which is I think a cool innovation we've made, is to try to build a system to capture the little smoke signals of something going wrong. So typically a company will not go wrong overnight. So Microsoft's not going to be like a bad stock tomorrow, having been a great company today. But if you then go and do sort of post-mortem of companies that have gone wrong, you will see in hindsight there are little signs, but individually none of these signs are big enough for you to sit up and pay attention. And the market doesn't pay attention, company does well, stock does well, and then all of a sudden, all hell breaks loose. There's a profit warning, and stock halves, and it's too late. So we've built a database to collect all the work we do on each individual stock, and then that way we can capture these clusters of little things that may or may not be an indication of something going wrong in the future. Interrogate those, and sometimes that's got us out of trouble a little bit at a time. So that's been a good innovation, but that's again, process, which which got us to that point.
Fantastic. In terms of the first principles of investing or the foundational principles, to what extent have they changed since the early part of your career to now? And how much do you expect them to change over the next 10 to 20 years?
Oh, forecasting the future is really, really hard, so I'm not going to do that, but I can talk to how they've changed. Like I said, I mean, the key change has been that the market is much more short term. The market is much more dominated by computers, trading algorithms, quant funds, and so the human element is on the retreat. And I think that's quite exciting. So yes, there'll be more volatility maybe and more strange things happening to pricing on individual stocks in the market. But I think, if you do your work as a stock picker, as a human being, I think the opportunities could be bigger. So that's one thing that's changed. The second thing is that the world is spinning around much more quickly. So if you look at the sort of indices of the biggest or best whatever companies in the world, that the tempo with which the constituent parts are, changing is probably double of what it was 40 years ago. And the whole digital transformation obviously has been a huge thing there. When I started work, one of the really good sectors to invest in was newspapers and yellow pages because they had these classified ads, and that's like printing gold because if you had the distribution, you had the clients, so it was cost you nothing to print these big yellow bricks, and all the advertisers have paid all the money. Internet comes along, and maybe with one or two exceptions, all those companies are bust. And the world is changing much more quickly, driven by digital, and so that's the second big change to the financial market, in my opinion.
Okay, and then so when it comes to the future, what do you perceive the biggest opportunities or threats to be to an established giant like AKO? You're great at what you're doing. You've proven that. If it were to go wrong, why would it go wrong?
Things go wrong for us when Mr. Market does not like quality companies. That happened in 13. It happened last year. So, we've been doing this for 18 years, and we've had 2 years when we've been completely out of favor. And I'm sure that's going to happen again in the future. That's more of a short-term thing. Long term, I think, we're taking this really lazy approach in that we identify good companies and the best managers, and then we sort of rely on them to do all the hard work. And we just sit on the sidelines, talk to them, make sure nothing's going wrong. But, I can't teach Michael O'Leary anything about running an airline. And so, I'm not going to kind of say what's happening to the airline industry in the future. But I'll leave it to him. And ditto. I can't tell the guys at L'Oreal anything about how to run a cosmetics business. But we think they are the best, and we think they'll make the right decisions, and we think the best place to meet whatever challenges are in the future. And then we think back to what I said about availability bias. Some bad stuff will happen, and so one of the things we like in our companies is that they have a conservative balance sheet because when the proverbial hits the fan like COVID, and you have no business for a while, and like Ryanair had to put all their planes on the ground. They were the only airline not to put all their planes on the ground and sack all their pilots and crew, and so they kept their planes certified and their pilots certified, and surprise, surprise, when travel came back after COVID, they've been taking all the market share they want because they had a balance sheet and all the other airlines didn't have a balance sheet, and all the other airlines are still struggling to fly what they used to fly before COVID. So, being conservative, realizing that stuff will happen, and whatever it is, it's good to have a bit of a war chest. It's the basic things really, but you'd be surprised in finance how people plan for everything known and ignore all the unknowns. But you should know unknowns will happen, right?
Absolutely, and factor them into your whole process and framework. I guess it comes back to that, right?
Yeah.
This is more a personal question, curiosity. It's one I like to ask fundamental investors. Bitcoin.
Yes.
What's your thoughts on it?
Bad.
Bad.
It doesn't solve any particularly useful problem that I could think of, and that to me is a fundamental problem with Bitcoin. So to me, it has all the hallmarks of a speculative asset class.
I want to direct the conversation back to, I guess, you as a performer who's excelled in a very competitive area. And oftentimes when we talk about performance, we instantly sort of gravitate towards that competitive aspect that, you know, you've talked about today and sort of
No,
all
I
of the.
blame my mother for giving it to me.
Oh,
She's
yeah.
80 and she'll still speed up a bit when she's skiing if someone's skiing past her.
Fantastic. So it's literally in the DNA there.
I'm afraid so.
Well, but the other side of performance, of course, is recovery, restoration, that ability to switch off.
Yeah.
I sort of call it like these green head moments, and you can look to find them acutely in the course of the day, but also chronically throughout seasons, careers. Like, how have you managed that?
Going back to the family, I was really lucky. I had this wonderful granddad who was kind of a hobby philosopher, and he talked a lot. Some of it stuck with me, and he'd say things like, "Oh, it's just money," and and if you think about what's important and what's not, money is a really useful thing if you have none, but then it quickly gets to a point where it's not so useful and can be counterproductive. So just having some perspective on that is really helpful. So yes, you might have lost $100 million, but it's a number on the screen and it could change tomorrow. And if you concentrate on the process, hopefully it'll change over time in the right direction. So you just need to have a strong philosophy around little things, and I think that for me has been absolutely key. I mean, family helps. So we had our first child during the financial crisis, and that was nice getting back to this screaming baby, which kind of took you a mind off things.
I can imagine.
And and I kind of pride myself on the fact that my wife usually can't tell whether I've lost or made money when I come home. So going for maybe a long walk if you've had a tough day to
Yep.
just sort of take an hour to let things kind of process a bit. Philosophical attitude to life, sense of humor. I think that those would be my key things.
And how do you have any hobbies outside of your craft? Is there anything you enjoy? You talked about skiing there. I know Norwegians are big into that.
Oh, you have to ski if you're Norwegian. That's
Of course
kind of
you do. Yeah,
so,
yeah.
I like these hobbies which kind of take the edge off a little bit, like occupies a part of your brain, but not all the way. So, like fishing, you stand there, you're fishing. It's like the hours just go by, and it's nice.
Absolutely. And then pivot into that, bringing it back into the day. Like the other thing I've sometimes talk about is how excellence is really just a series of days that repeat across time. And if you win each day across time, you compound your gains and you'll hit tipping points. You'll have those breakthroughs as well as the drawdowns, but you'll be directionally correct in terms of trending upward.
Yes.
Are there any things that you have that are like, as Gorm, this helps me win my day? These are the non-negotiables. This and this is happening. Or is there any specific routines or habits?
I have decent routines around things like getting good sleep. I have pretty strong routines around exercise and reasonably good routines around eating. But otherwise, I think I kind of like it when days are a bit different. So I think I get bored doing the same thing all the time. So I think happy. They're lucky in that I like a bit of variability. Absolutely. I think probably exercise. We're given this tool that is our body and our brain, and it's all so closely linked. If there's an issue outside your brain, that's where you feel it, and if you're stressed, you feel it in your stomach, and all these things. So I think it's absolutely imperative to keep up some kind of exercise regime, and I get a bit frustrated when people say I don't have time to train, or I don't have time to cook and time to eat, because then you just have your priorities wrong. I think, again, if I were a sort of benign dictator running the country, I think I could fix that problem by just like banning daytime TV for anybody who wasn't bedridden, because it's just like
Yeah.
so much time is wasted on social media, TV. So to think that you don't have time to exercise when you look at your screen time, it just doesn't compute. And I think your baseline performance is so dependent on physical exercise and what you eat, that's a really, really tragic problem right now when you look at the health stats and how the NHS is spending 20% of their budget on lifestyle preventable type of diseases.
Yeah.
So yeah, so those are some of the things that helped me anyway.
They're very insightful. Thanks for sharing that. Coming towards the end now, one of the questions I wanted to ask you is, what person do you think has had the biggest impact on helping you become the performer you are today?
My parents, and my granddad for doing the whole philosophy thing, introducing me to that very early on. And because philosophy is not very sexy, and if you look at philosophers now, they just sort of go down this really obscure rabbit hole, so it just seems to have no bearing on your life whatsoever. But he brought it back to the basics back in the days when the philosophers were actually talking about how to live your life, what's good, what's bad, and the really, really important questions in life. And they probably spend more time thinking better about those questions than what most people do now, because you just have your head in the screens and have no time to think and watch TV all the time. So that introducing me to that whole kind of introspection thing was really, really helpful. Real privilege to work with people like Nikolai. The caliber of people at AKO is just absolutely fantastic, and so I think we learn from each other all the time, really, and so. And then, if I don't mention my wife, she'll probably beat me up. So I'll
I was like, and
credit her with that very, very important third pillar in your life, which is family, home life, and social life, and that's all her credit.
Brilliant. And is there one figure? So again, same question, but is there one body of work or author or philosopher that you think has had a similar effect?
Socrates, Hume, Schopenhauer, Nietzsche are the philosophers that I get the most out of. I kind of like the idea of Buddhism that is a slightly chill religion, in that I think one guy described it really well as it's a bit like a boat. You use it to cross a river when you have a problem, but you don't necessarily want to strap that boat to your back and carry around every day. So religion is a kind of tool that you use it when it's useful, but don't sort of stop you from eating lobster and whatever. And then out of all the sort of business book stuff, I think maybe 4 books I absolutely loved. The Black Swan by Taleb. I referenced the Fox and the Hedgehog. I can't remember what that book is called. There's a book called Super Forecasting by Tetlock, which is really good. And then the 4th one would be Thinking Fast and Slow by Kahneman. So I think, among all these books, those are 4 really good ones. And then at AKO, we've written 2 outstanding books, obviously, one called Quality Investing. And then we worked with this Norwegian policeman who's written a really, really good book about the art of the professional interview, which, is something that, again, we discovered we were really not very good at. And, with the help of this chap, we deconstructed the whole process and liked it. But we've got a lot better at it over the years, and that's again something that's fun to work with, because you can use that both at work and at home and everywhere else, really. The better you communicate with people, just accelerates everything, and avoiding misunderstandings is can get rid of so many potentially really frustrating problems in life.
Absolutely, that's really useful, and we'll hope to get some links to those in the podcast. I'm just going to a few quick fire questions to finish.
Go.
So, coffee with any historical figure, who would it be?
I have to go large. I'd go with Jesus.
Okay, excellent. Favorite movie?
True Romance.
Okay. Favorite series?
Don't really have one, sorry.
Okay. A quote?
A quote.
Is there one that resonates with you?
Yeah, I go back to my coffee buddy Jesus and said something like, "Don't worry about tomorrow. Tomorrow will bring its own troubles, and today's troubles are enough."
Fantastic. Last question. If there was one message you could install into society and they would understand it comprehensively, what would that message be?
Um, I think getting that whole eating and exercising thing radically better would create a lot of happiness. So that probably be the biggest lever for happiness. And I totally appreciate it's linked to poverty, and that's a bigger question society wise. But I do think that if everybody could take an hour out of screen time and put it into some combo of cooking from scratch and doing a bit of exercise, and that could just be a walk in the park and do what the Japanese call, a forest bath. I think cost benefit, that is the simplest, best lever that I would pull potentially if I were the big nine dictator in charge.
Brilliant, Gorm. I want to thank you so much for taking the time to chat. It's been an absolute pleasure. And no doubt I look forward to watching AKO dominate for years to come. Thanks so much.
Been fun, James. Thank you so much. Cheers.
Cheers. The thing I love most about trading and investing in general is that it's completely meritocratic. There's lots of areas in life, especially within performance, that are very subjective and qualitative. But in investing, you have this information, everyone else has it, you make a decision, and a year, 5 years, 10 years down the line, we can start to compare the decisions you made versus someone else who had the exact same information. And given enough sample size and time frame, we can very clearly see who performed the best. It's, for me, almost a mental sport in that respect. One of the things I love most about Gorm is his humility. I don't know if that's linked to his Norwegian roots. I think AKO embody this as a whole, despite all their success. And I believe looking at the challenge of performance through this lens of humility is part of the reason they are so unconventional and dynamic in terms of how they achieve success in their space. Sometimes it's not about how, but rather who. And I think AKO are a phenomenal example of the power of this. Traditionally in finance, you've got these market wizards that can just, read the market, the touch me, you'll heal types. And yes, AKO has outlier leaders in terms of Nikolai, of course, and Gorm, amongst others in that team. But fundamentally, they're a talented group of individuals that have high baseline abilities, coupled with the humility to not just listen and leverage, but to actually bring other experts into their team. Gorm talked about their in-house black belt accountants working their magic, the black belt psychologists assessing management teams, then the black belt linguists deconstructing data, the black belt data teams tracking the leading indicators, looking for smoke. And finally, I think he mentioned their black belt marketers conducting that primary research function, rather than the traditional, conventional superstar investment team who like to think they can do it all, which is absolutely the status quo in this space. And some do. Here's the key thing for me, though. This type of setup does not manifest without humility at the roots of the organization. Gorm even had the humility to point out that after reading my book, what jumped out at him was that they weren't fully aligned with the principles that optimize the talent identification side of things. Gorm then immediately sought to optimize this, plugging gaps that he and the team spotted. There was zero panic. It was calm, clinical, but assertive, and a ton of action and sincere engagement to immediately start tweaking and experimenting in terms of how they optimize their process in this area. Another thing that jumped out in the conversation was this sort of long-term thinking versus short-term. A particularly interesting point to reflect on was the Benjamin Graham quote Gorm shared. In the short run, the market is a voting machine, but in the long run, it's a weighing machine. And for me, the stock market is just a metaphor for life and for performance. Now, in the short term, the stock market, life, your pursuit of excellence, there's a lot of noise. And one area you can go wrong is getting caught up in that noise and finding yourself chasing short-term results at the expense of your long-term development. The behaviors you might engage in to generate short-term results are very different from the behaviors that will provide you long-term success. And this is a powerful example of how the thing we crave so much, winning, can also hold us back if it's not managed properly. After all, you can win today by relying on skills you know won't work at the next level or in the long run. For example, raw power in rugby or a photographic memory in trading are skills that can enable you to produce winning results in the earlier stages of your development. The snag, though, is the effectiveness of these attributes. In the long run, they sort of drop off a cliff as the standard of competition increases. At this point, everyone has these skills. So suddenly new skills like passing off both hands are key for the rugby player, or connecting information fast and under pressure are key for the trader. And if your sole priority has been to win today and you've relied on the skills that don't work at this new level, you won't have developed the ability you need to progress and compete. And I think one of the messages here are that there are times where you must sacrifice winning today to prioritize developing the capability you need to win tomorrow. You need to avoid short-term strategies like working harder for longer and ignoring rest and recovery, or going to the organization that pays the most over the one that will develop you most by perhaps giving you the opportunity to compete. Ultimately, elite performance is a long-term process. Great skills, like great companies, will need time to compound. So you can eventually hit those tipping points and experience those breakthrough moments that propel you to the top. Progress isn't linear for you or great companies. And the question to reflect on is, what's the best decision for your development tomorrow, not your ego today? When it comes to your ambition, talent, and your effort, we want long-term quality investments of these crucial assets. The fact is, excellence is volatile, and there are no straight lines to the top, and there are no exceptions to this rule. There's always going to be a lag between your actions and the outcomes they produce. And during those lags, the outcomes can be all over the place. Gorm shares how the outcomes will tell you every day for a year that you're an idiot. He also emphasized how you have to separate the process and the outcome, and you have to have the confidence in your process to be able to ignore that short-term noise. And I think that's a big part of AKO's huge focus on optimizing that process. And if you really feel the need to engage in some kicking and screaming, as Gorm described it, then direct this at the quality of your process, not the outcomes. For me, this conversation was another powerful reminder for how important a robust process that you trust is. It transforms your commitment to achieving a goal or pursuing excellence from that risk or dream chasing exercise to a set of logical steps. The outcomes might not be there yet, but when you have a robust process to get you there, this reduces the volatility, it shuts out some of the noise, and it keeps the focus on controlling what's controllable. I want to say thanks again to Gorm. I love the conversation, and I wish you and the AKO team the absolute best. I have zero doubt you'll continue to dominate the space for years to come if you stick to these principles you currently do. And hopefully we'll get to grab a beer soon. Cheers, Gorm. Thank you for choosing to spend your time with us today. I love this topic of human performance and excellence, and I've been engaged in it neurotically for the last 20 years. It's a sincere privilege to have the opportunity to share my knowledge, network, and learnings with you. Now, go and put the principles to work. Make sure you let us know what resonates. Reach out with questions, blind spots. We've got you covered. Remember, excellence is just a series of days repeated over and over again. Now go and win your day. In 2021, I published my first book, Accelerating Excellence. If you're finding the conversations and information on this podcast useful, you might want a physical reference point and to gain even deeper awareness of the concepts discussed. The book's actually more of an operation manual containing more detail with a step-by-step guide on how to implement all this stuff so you can get maximum benefit, which was one of my main motivations in writing it. Yes, I want the podcast and the book to be inspiring and entertaining, but it was non-negotiable for me to make sure that the listener or reader is provided with a structure and direction in terms of actually putting this stuff to work. The book's called Accelerating Excellence. It's a #1 international bestseller. And if you're moving from more than just interest towards implementation, I think you'll really enjoy it. Like everything I do, the book is evidence-based, but practice-led, drawing on my experience working with some of the world's most elite, exclusive, high-performing teams and individuals. It's filled with highly actionable strategies you can apply today to become better tomorrow. If this sounds like something from you, see the link in description where you can download 6 chapters of the book for free in either audio or digital format. It's also available to purchase on Amazon, Barnes & Noble, and at your local bookstore. I hope you enjoy. By now, we all know the importance of a winning mindset. We're bombarded with elite performers telling us that mindset's what separates the best from the rest. That if we want to be successful, we need to be more confident, resilient, and motivated. And of course, when panic strikes, we need to calm down, relax, or chill out. Great, we get it. But the question is how? We're given this guidance with almost zero practical advice in terms of how to achieve it. Where can we actually go to develop that world-class mindset? What's the back squat for resilience, the bench press for confidence, and the bicep curl for positive thinking? Well, that's why I created the Mindset app. Through the app, you'll gain access to the psychological skills training used by world champion athletes, special forces operators, and some of the world's most successful traders and investors. The reality is these guys pay me a fortune to help them get this right. But the thing is, these skills are equally, if not more important for the aspiring athlete, executive, or operator. And that's exactly why I created this app. I want these tools and training available to anyone, anywhere, anytime. Mindset is a skill, and like any skill, it can be developed with the right strategy and effort. The tools and techniques are designed in a way that will literally rewire your brain, like learning to ride a bike or drive a car. All the techniques are designed with creating a high-performing, self-regulating you 2.0. Every strategy in the Mindset app is backed by empirical research. There's 10-minute emotional control training exercises that have been shown to increase your ability to overcome detrimental decision-making biases by up to 80%. In another study, just 3 weeks of executing visualization training led to 34% improvements in performance. Another research group found 50% greater improvements in the rate of learning. And just a few weeks of performing visualization led to 22% reductions in anxiety and 21% increases in confidence. These numbers are phenomenal, and I've never met an elite performer in any domain that can afford to be missing out on this type of edge. What I love most is that we've structured everything so that you don't need to carve out an extra hour in your day to get this done. Small bite-sized chunks of 5 to 10 minutes are all it takes. In fact, I'd only encourage you to use the tool on your commute, in the sauna, at the end of your working day, or bolt it onto the end of your gym session. Any dead time you have can now immediately be transformed to deliver you extreme performance gains. My goal is to remove every possible obstacle to your development. And with that in mind, the basic package is completely free. Visit the link in description and sign up for our pre-launch free emotional control, visualization, and performance routine programs. I really hope you enjoy.